Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The White House confirms that Donald Trump and Xi Jinping are set to meet next Thursday on the sidelines of the APEC summit, with the U.S. president looking to extend a pause on higher tariffs on Chinese goods in exchange for China resuming American soybean purchases. But things are not looking good for Canada. Trump says all trade talks with Canada are now terminated over an ad that featured former President Ronald Reagan speaking negatively about tariffs. And Trump is warning against Israel's annexation of the West Bank after Prime Minister Benjamin Netanyahu's right-wing rivals narrowly passed a bill in its first parliamentary reading. Well, it's just gone 8 a.m. across the Emirates. I'm Xinhua in Dubai. We made it to Friday, everybody. And guess what? I haven't said this in a while, but there's U.S. data today, U.S. CPI. It's been widely weighted because of the shutdown, but today is the day that we are going to get that October release. So a bit of a delay there, but still perhaps significant for markets, market moving. Speaking of markets, let's check in on how things are today. Very strong handover from Asia Pacific, mostly from Chinese tech. We're going to get there in a moment. But as we look back at the China plenum this week and some of the key takeaways from that, very supportive towards Chinese tech. So Asia Pacific, strong handover. S&P futures leaning towards green once again, up 0.2% yesterday. A more positive end for Wall Street as well. So again, shrugging off some of those geopolitical concerns and some of the earlier concerns we had in the last week actually, about private credit. So all of that has been brushed aside. A real focus on earnings and earnings momentum, with most of the companies having reported now actually beating on earnings. 10-year yields were moving slightly higher again, just shy of 4% today, so 3.99, in line perhaps with the move upwards in oil that we had throughout the course of the day yesterday. Today, Brent stabilizing, as you can see, down 0.5%, but for the week actually now jumping more than 5%. That is its biggest increase in 4 months, but again, only partially offsetting the 13% decline in oil prices that we've seen since September, but oil clearly reacting to the news of those new U.S. sanctions on those Russian oil companies. So big news yesterday, and we're still seeing the effects of that. Switching over, I also just want to point your attention as well to the fact that oil stocks have not really done a lot this morning. If you take a look at how some of the oil majors have performed, very underwhelming versus other asset classes, other parts of the market. But perhaps in light of the broader risk-on rally that we're beginning to see, maybe there is scope also for us to see a pickup in some of these oil stocks. But I will just say there's still a lot of focus on the fundamentals and the oversupply outlook as we head into the end of the year. Yes, yesterday we had that blip in terms of geopolitical friction, and once again, Russia supply is being priced into the market. But the bigger picture is a lot of supply is going to hit the markets in the next couple of months. We're going to talk more about that on the show too. But let's get back to one of our top stories today. Chinese President Xi Jinping says technological self-reliance will support the country's goals for what he calls quality development. State media says Xi spoke today with non-party members to outline the country's new 5-year plan a day after the Communist Party plenum wrapped up. Let's go to Shanghai and our China correspondent, Min Lo. Min, just walk us through some of the key takeaways here from the plenum and this China self-reliance on technology. What does that actually mean?
Yeah, self-reliance, definitely the top theme in this year's plenum. It was one of the top priorities. The Chinese government at the press conference earlier saying that its industrial policy is the #1 task for the government. And it's talking about technological innovation and also the upgrading of traditional industries. China really wants to capture the commanding heights of science and tech. It wants to be a powerhouse, not just in chips and AI, but also in transportation, the internet, in aviation, aerospace, a low-altitude economy, new materials, new energy. All these emerging industries are going to be a key focus, and that means expanding investments into this area. The communique pointed out that China is going to double down on advanced manufacturing as a key backbone of the economy. Now, manufacturing already is the biggest contributor to GDP. About 25% of GDP comes from manufacturing, and you can imagine that this is likely going to be a continued sticking point, with the U.S. accusing China of over-relying on its manufacturing power and exporting its overcapacity to other countries, and this could potentially set the tone for the Trump-Xi summit next week as well.
Okay, so that is the focus on the tech and the goal to achieve some sort of strategic autonomy there. What about consumption? Did we learn any more about what the authorities are thinking regarding stimulating consumption?
Yes, that's definitely another big priority for the government in the next 5 years. If you look at the communique, consumption was mentioned 4 times, which is more than the one time it was mentioned back in 2020. And analysts from Goldman Sachs crunching the numbers in terms of the number of mentions for different key themes highlight that this is an important point. And the other thing that is a little bit concerning is when you think about increasing consumption, it also has to do with improving people's livelihoods. But that is pretty low down in the priority. The tone is pretty cautious when it comes to spending on public welfare. The government saying that they will act within their means to improve social welfare programs. And if you look into the details, there's a lot of talk about providing support to key business entities, incentives to them. And this could look like perhaps market deregulation, policy support. And so it looks like China will still be leaning more heavily on supply side reform than demand side stimulus. I think this is where it might be falling a little bit short of some investors' expectations. Citigroup, for example, saying the language is not strong enough to suggest the government's determination in tackling inflation. But analysts are a little bit split on this. Others are saying that it's a clear signal of a priority to end deflation. And some are saying, at least in the short term, we cannot expect very strong stimulus, given that China is already on track to hit the growth target this year.
So interesting. Min Lo, thank you so much, Bloomberg China correspondent. Well, the White House has confirmed that President Trump will meet with China's Xi Jinping next Thursday on the sidelines of the APEC summit, as both leaders aim to ease a simmering trade war. Trump says he wants to extend the pause on higher tariffs on Chinese goods in exchange for Xi resuming U.S. soybean purchases, cracking down on fentanyl, and easing curbs on rare earth exports. This comes as Trump says all trade talks with Canada have been terminated because of an advertisement. Joining us now is Charles-Henri Monchau, CIO at Banque Syz. Let's start with this upcoming meeting. Now we know for sure it's going to happen. Does that remove some negative tail risks in the market, do you think, or does it make the stakes even higher for when these two leaders meet?
Thanks for having me. Look, I think that we can expect a friendly meeting. This is our core scenario. There is just too much to lose on both sides. China needs to sell to the US. US needs to stay well with China. So we think that this is going to happen. This is why, by the way, we have seen this taco trade taking place since the bad news again. So it will be a very big negative surprise if we don't see a friendly meeting in Seoul at the end of the month.
Yeah, okay. At the same time, you look at metrics of volatility, VIX, once again, keeps dropping and really subsiding into this event. And I wonder whether it actually is worth positioning for some downside risk, given, the vol markets aren't pricing a lot of downside risk at this point. Is it worth hedging into that scenario, just in case the talks don't work out?
Well, I know it's not that cheap. The protection is not that cheap. And also, when it comes to hedging, you need to look at the positioning of the markets. I think that too many investors are still underexposed to equity, especially
to US markets.
To the US market,
even at these levels.
Even at these levels. I think the retail investors have been playing it perfectly this year. But if you look at institutional hedge funds, they're underexposed. And if there is, a trade-up, they will have to catch up. So that's why I think the hedging is worse when too many investors are overexposed. And I don't think that's the case at this stage.
Why do you think U.S. stock markets have done so well? Is it simply because they're being lifted by AI and the optimism around AI, or there's some more cyclical factors at play in the fact that the market is anticipating an easing cycle with a relatively benign U.S. backdrop?
Well, first, let's keep in mind that this year is a year where U.S. is underperforming the rest of the world, which is something new. But true, there has been this V-shape. I think AI, this Gen AI secular bull market is one reason. But also, when you look at it, Joanna, it's third quarter, Atlanta Fed nowcast. We're talking about almost 4% real GDP growth. Inflation is probably around 3.5%. So we are talking about nominal growth, which is not too far away from 8%. So this is pro-risk. This is this is a kind of nominal growth where you want to be with equity markets.
Yeah, so speaking of inflation, we actually do have a CPI print coming up today. I've been reading the mantra 3% is the new 2%. I mean, investors kind of seem to be okay with 3% CPI here.
Well, I think there is something weird with this report is that this number could have been delayed much further. So why does Mr. Trump want the number to be released? There is one official reason, which is this number is tied to social benefits calculation. Okay, that could be one reason. But also, as you know, there is a FOMC meeting coming. So maybe he's quite confident that this number will go in the right direction. So,
as in it will surprise to the downside.
Exactly.
The right direction.
I would be very surprised that inflation come in higher than current consensus expectations.
Okay, interesting. We'll see how that pans out in a couple of hours' time. Look, there's something that you were writing about, which I think is actually really interesting in the context of how the dollar has performed this year, because that's really dominated so many of our discussions. But you say that this isn't the end of U.S. monetary dominance, but the emergence of new currency zones. What do you mean by that?
Well, first, there is a misunderstanding in the market that the dollar is weakening. That means the end of dollar dominance. Yeah. We disagree on that. And
it's too entrenched in the financial architecture.
Yeah. And if you look at numbers, speak for themselves, is that yes, the dollar as a percentage of forex reserve has been going down, which is, by the way, a goal that Mr. Trump wants to achieve, because he thinks that if it's too high, that means that the dollar is overvalued. But then if you look at the dollar as a percentage of SWIFT payments, it keeps moving up.
Yeah.
Okay. Then,
I mean, something like 90%. It's a really high number.
Yeah, it keeps moving up, and there are different reasons for that, but obviously the U.S. administration is pushing for it. Now, it's true that if you want your currency not to appreciate too much, you need to buy other currencies. We are doing this in Switzerland with the Swiss National Bank. We keep buying other currency because we think that the Swiss franc is way too high. So the U.S. does have a plan to keep the dollar weak, and to do so, you need to buy other currencies, or maybe why not neutral assets. And this is why we think that there is indeed a plan to diversify, into other currencies. That could be, by the way, Bitcoin. You know that many countries, sovereigns, are currently accumulating some Bitcoin. That's the case of Ukraine. Sweden has been talking about it. Maybe there are some Middle East countries doing the same. And it's a kind of a game theory. You don't want to be the last one. And this is probably why the U.S. does have this plan, because they want to be the crypto nation, because they want to offset inflation they've created. They want to also potentially buy back the debt they have issued, but also to be positioned in case of new currencies become used more and more by other countries.
You sound like you were a fly on the wall in a conversation I had yesterday with Eric Trump, actually at the AIM summit. And, it's not a big secret to anybody. He's a massive supporter of Bitcoin. We're going to play a bit of that tape later on in the show. But to your point, these are the type of the ththings that he was saying, especially emerging markets. There's a big belief there that Bitcoin is where you want to be. All right, Charles-Henri, thank you so much. Charles-Henri Monchau, CIO at Banque Syz. Now, coming up, a move by the Israeli parliament to annex the West Bank has angered the U.S. We look at what's at stake next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Right-wing rivals of Israeli Prime Minister Benjamin Netanyahu have narrowly passed a West Bank annexation bill in its first parliamentary reading. The move has drawn criticism from the U.S., with President Trump saying the annexation will not happen.
The West Bank is... Don't worry about the West Bank. Israel's not going to do anything with the West Bank, okay? Don't worry about it. Is that your question? They're not going to do anything with the West Bank. Don't worry about it. Israel's doing very well. They're not going to do anything with it.
Okay, let's get out to Jerusalem now and speak to Bloomberg's Dan Williams. So this vote narrowly passed in the Knesset yesterday, but it instantly drew rebuke from U.S. President Trump. We heard his comments there. And also J.D. Vance, who is just returning from the region, and he's saying he took personal insult to the vote. Why did the Knesset vote on the annexation yesterday?
Well, I think what we're seeing now is the chaos that accompanies an election year. Israel is less than a year away from its next scheduled election, and I think the various parties and a very fractious parliament are already jockeying for positioning for constituencies. And it could just be that Netanyahu took his eye off that ball. The optics here are the problem, the mood music, because really that vote was symbolic. That's a term used by the Netanyahu coalition to dismiss it. However, when they say it was an opposition vote, that's really not true. A large number of the lawmakers who supported this motion are actually from the current coalition, far-right members who would like to see an annexation of the West Bank for biblical reasons, for security reasons. And it would appear that Netanyahu did not move fast enough to head this vote off, coinciding with a visit by the U.S. Vice President, with the incoming visitor, the U.S. Secretary of State Rubio, and indeed, while two senior White House envoys, Steve Witkoff and Jared Kushner, were shuttling between Israel, UAE, and Saudi Arabia to try and push forward this Gaza deal, now in ceasefire, a Gaza deal that Trump hopes to turn into a peace plan. So for now, there's really no hope of this happening. Netanyahu won't let it happen. He's not going to allow Parliament to move ahead with any such motion. The US President Trump has made clear that this is something that won't happen. He gave an interview to Time magazine where he said he promised Arab powers that it wouldn't happen, that Israel would lose US support if it were to happen under his watch. Those are very stark terms, and this is a US president who is very proud of keeping his pledges. So no, it won't happen, but it's worth keeping in mind that as recently as July and last year, the parliament did pass other symbolic motions on similar issues. There is apparently majority support for this. So further down the line, who knows? For the time being, not happening.
And Dan, what do you make of the sharp response out of the U.S., both J.D. Vance and President Trump yesterday? I mean, is there a real possibility here that Israel could lose U.S.'s support?
I don't think so, not at this time. There are so many reasons for that partnership to be going strong, not least the partnership during the war, which apparently proved itself militarily, and the sheer investment of the Trump administration in making this Gaza deal work. I think that was just sheer personal exasperation. These are very busy men. They've applied much of their time to Israel, to coming out to Israel over recent days, and they simply don't need this mood music, these optics, which are very, very problematic. It's worth keeping in mind that Vance was just a day prior to those comments yesterday using the word weird, the same word he used for this motion, he used for the media descriptions of the ceasefire in Gaza as being about to collapse. He says it's not. So I think what we simply have here is peak by these senior figures in administration. They want the Gaza deal to work. They want it to open up the way to a wider regional accommodation between Israel and the Arab world and the Muslim world. And they're simply wondering at the timing of this. It's exasperating for them. They know it will trouble many observers in the Arab and Muslim world. And I think behind closed doors, they will have come to their Israeli counterparts and said, could you not have just held off on this for a few days until we're out of town? I think it's sheer personal exasperation rather than a deeper strategic worry.
Bloomberg's Dan Williams in Jerusalem. Thank you so much for the reporting. Now, coming up, Eric Trump tells us why he remains extremely bullish on Bitcoin and is sticking to his $1 million target on the cryptocurrency. That conversation is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Eric Trump says he's never been more certain about the future of cryptocurrencies, calling Bitcoin the key to global financial security and predicting it could soar past $1 million per token. I spoke to the son of the U.S. president and co-founder of American Bitcoin at the AIM Summit in Dubai.
I've never been more certain in my life. I'm putting everything into this venture and into cryptocurrencies in general. First of all, it makes sense because it's the wave of the future. Second of all, the speed of growth of the industry is astronomical. Third of all, if you just look back 12 months. I mean, we're double the price in a 12-month period of time. People, cryptocurrency, people have a very short memory. In real estate, people have a very long memory. It's kind of amazing. You'll get to 125,000 and it'll draw back $10,000. And everybody goes, is this the end? And then guess what? 3 weeks later, it'll shoot up another 30%, and then it'll draw back another 5%, and then people do the same exercise again. No, it's remarkable. I mean, 2.5 years ago, I had friends yelling at me, "Hey, it's too expensive." It was $40,000. I go, guys, buy. And then they come to me when it's $80,000. It's too expensive. I say, guys, buy. And then they come to me when it's $120,000, and they say it's too expensive, and I say buy. And every single time I'm right. And by the way, these are small periods of time. So I've never been more bullish in my life. And when you're talking to the wealthiest families on earth, and when you're talking to the biggest sovereign wealth funds, and when you're talking to cities, and there's one not too far away from you guys, who literally take the excess power of an entire city during the winter when they don't need it to actually cool their commercial buildings and residential buildings, and they use that for Bitcoin mining, you better believe that this thing is going in the right direction. And it's been amazing to watch. And I'm really proud to be at the forefront of it.
Price target?
Oh, price target. I'm so sorry. Listen, Jamon, I've always said that I think it's going to go past $1 million in time. I mean, it's going to take a number of years to get there, but I think it's going to go past $1 million. This year, we'll see. We're going to have quantitative easing, obviously, in the United States, which is big. But listen, you have to look at it as a global asset. And what Bitcoin does is it gives security to all those people around the world that don't have security. If you live on the African continent, for the most part, you don't have security. If you live in Asia, for the most part, you don't have a whole lot of security, right? There's a lot of variables that could otherwise come and influence your money and make that money illiquid, make that money non-transferable. Same thing with South America. Bitcoin is the answer for all of those people. And, I've always said that I think we're going to be at $200,000 before we blink, whether it's the end of the year, whether it's first quarter next year. I think we're going to be at $200,000 very, very quickly.
American Bitcoin co-founder and chief strategy officer Eric Trump. I should just say there, the reason that I was laughing is because my original question to him was, where do you see Bitcoin going, the price of Bitcoin going? He didn't answer the question. So I pestered him a little bit more to give me an exact price target. So that was Eric Trump telling us about where he sees Bitcoin going. Okay, now for a look at some of the other stories we're following. Binance co-founder Monchau has received a pardon from President Trump. Trump told reporters that he pardoned Zhao at the request of a lot of good people, though he has never met him. The move marks the latest act of clemency the White House has granted to a crypto entrepreneur, underscoring how the Trump administration has positioned itself as a friend of the industry. Intel shares rallied in late trade after the chipmaker returned to profitability and gave an upbeat revenue forecast. It expects fourth quarter sales to come in around $13.3 billion, which is just below estimates. But the outlook suggests Intel is on the right track following a turbulent year. CEO Lip-Bu Tan has recently secured an investment from the U.S. government and backing from NVIDIA and SoftBank. And coming up, oil is set for its biggest weekly gain since June after U.S. sanctions upend the market. We'll speak to Nadia Martin Wiggen from Svelland Capital Director on what this means for supply and prices next. Good morning. This is Horizons Middle East and Africa, our top stories this morning. The White House confirms Donald Trump and Xi Jinping are set to meet next Thursday on the sidelines of the APEC summit, with the U.S. president looking to extend a pause on higher tariffs on Chinese goods in exchange for China resuming American soybean purchases. Trump is warning against Israel's annexation of the West Bank after Prime Minister Benjamin Netanyahu's right-wing rivals narrowly passed the bill in its first parliamentary reading. And Ivory Coast heads to the polls on Saturday, with incumbent leader Alassane Ouattara widely expected to secure a fourth term. We speak to Beverly Ochieng, a senior analyst at Control Risk, about what's at stake. It's just gone 8:30 a.m. across the Emirates. I'm Xinhua Versace in Dubai. Well, looking ahead, we actually get CPI data later today. Expectations is that we'll probably move slightly higher to cross the 3%, possibly even slightly higher on the headline print. But the first time in a while, we get some key, potentially market-moving data. So watching out for that as we continue to take a look back at some of the earnings this week. Equities trading in the green, mostly strong handover from these Asian markets. As you can see, Asia-Pacific index up 0.5%, actually at an all-time record, and we're going to talk about some of the reaction this morning in these Chinese tech names. S&P futures up 0.2% as we head into that CPI. Some positive results from Intel yesterday, so watch out for that in the tech space. 10-year yields, though, still below 4%. 3.99 is where we're at, but we've sort of moved back up again. We were trading, 3-4 basis points lower, but with the upward move in oil yesterday, you also saw some of that strength in U.S. 10-year yields unwound. And then Brent this morning trading just shy of $66, but of course coming on back of a very strong day for the oil complex yesterday. For the week, oil is actually up 5%. So its strongest week since the beginning of September. But still, since the beginning of September, it's down 13%, which tells you a lot about how the market is thinking about fundamentals here, the overhang of supply versus the latest announcements out of the Trump administration to sanction those Russian producers. We'll talk more about that with our next guest. And speaking of oil, just to draw your attention as well to some of the oil majors, stock price performance. And as you can see here, in line with the price of spot, what you've seen is an underperformance out of these oil companies relative to the broader indices, relative, of course, to other parts of the market, including the tech space, financials, and some of the more pro-cyclical parts of the market. Oil stocks have underperformed. But we'll see, in light of the broader rally and the rally that seems to keep going in the U.S., whether oil stocks can actually join in on the move as well. Okay, let's check in on how markets in Asia are faring as well. Avril is in our Singapore studio, and earlier on in the show, we were speaking to Minmin, sort of recapping one of the main headlines out of the plenum this week, which is that there is a focus now on China's tech self-reliance. What has the reaction been this morning, Avril?
Well, you're seeing that climb in chip makers, but the other thing also, when you talked about how tech is really outperforming in the U.S., I think you're seeing that follow through in the Asia Pacific as well. Don't forget, when it came to earnings, Intel sort of lifted the mood among some of these tech names overall. You're seeing some of their reaction among the suppliers in the region as well. And then you have a further tailwind in the form of U.S.-China trade tensions, I suppose, easing a little, with the White House confirming the date of a meeting between Trump and Xi. So that seems to be enough to put Asia stocks on the front foot today. You're seeing the Kospi leading the rebound. Don't forget stocks in Japan, South Korea, they came under pressure just a day ago. Now, quickly, just to highlight as well what we're seeing on dollar yen, it's climbing towards the 153 handle. This is this level, already the highest in about 2 weeks. And this is despite a relatively hot CPI print out of Japan. Investors, though, don't seem terribly convinced that this is going to be enough to spur the BOJ into aggressive rate hikes. Jumana.
Avril, thank you so much. Avril Hong in Singapore. Well, oil is on track for its biggest weekly gain since June after U.S. sanctions on major Russian producers upends the market. Chinese state firms have cancelled some purchases of seaborne crude, while flows to India are expected to plunge to near zero following the penalties on Rosneft and Lukoil. As a result, oil benchmarks in the Middle East show producers seeing higher demand for their crude. That is as Indian refiners look to replace those sanctioned imports from Russia. Joining us now is Nadia Martin Wiggen, director at Svelland Capital. Nadia, good morning to you. I guess the question is really, how effective are these sanctions going to be, and how worried are China and India going to be about the potential consequences if they continue to buy Russian oil?
Good morning. So already we see that they are taking it seriously. Both China and India, we've seen official announcements. We've seen activity in the physical market with India, not only state refiners, but also independent refiners starting to buy other crudes other than Russian crude. India has been importing 1.6 million barrels per day of Russian crude this year, and that is, of course, at risk. But what we have seen every time sanctions come out, and in January, we had the Biden sanctions that went against Gazprom and Surtuneftagaz, is for a month we saw a pullback in Chinese purchases of Russian crude, and then China was back in the market. We also saw that what was officially deemed barrels of export from those companies suddenly became unknown. So this is where, Rosneft and Lukoil export 2.7 million barrels per day of Russian crude. But is all of that going to be locked in? The market probably doesn't believe that.
Okay, but at the same time, you mentioned India importing, I think the number you said was about 1.4 million barrels a day of Russian oil.
1.6.
If they decide to 1.6 million. Okay, so if they decide to stop buying Russian oil, they will have to find another supplier. Do you see that benefiting OPEC? Do you see that benefiting some of the Middle East producers out there?
Absolutely, because we need to replace sour crudes. And we have seen that already India started buying crude for December delivery. And basically, the refiners had already allocated everything they needed through December, and they were starting to show tenders for January delivery. So it shows that they are already trying to replace some of those barrels. In particular, Reliance has a contract with Rosneft to take 500,000 barrels per day of crude. So that already needs to start to be replaced. And I think the timing of this coming after OPEC has increasingly announced that they will be bringing back more oil to the market at a time when Russia is underproducing versus the higher quota, it shows immediately that Saudi, Murban, all of these sorts of barrels will be, and most importantly, Iraq, will be benefiting from this. We've had the reopening of the pipeline from Kirkuk to Ceyhan, which goes directly to Turkey. And Turkey's been taking 400,000 barrels per day of Russian crude.
Yeah, well, that was going to be my next question. A lot of focus the last 24 hours, a lot of commentary around Russia and China, understandably so. But Turkey still import about 60% of their oil needs from Russia as well. Why is there not more emphasis on Turkey and their appetite still to continue buying Russian oil despite being a NATO member?
Yeah, well, Turkey is in the middle, right? And so they're not an EU member. They are a NATO member. They have been shifting their diet a little bit, and then you have also barrels coming into Turkey via the Caspian, which is mixed. It's blended Russian crude, so it's not purely Russian crude. In addition, Turkey's been cut off because of this pipeline coming from Kirkuk. So this is when we look at the timing of these sanctions. It's been a multi-pronged approach, and the U.S. has really pushed Iraq to reopen that pipeline. It's now exporting around 180,000 barrels per day. So out of the 400, that's great. But it has the pipeline capacity to take 450. So I think this is very much directed in terms of replacing that appetite. There's also, there are relationships within refineries and within trade deals that have been in existence, but those right now are very much being replaced. So Turkey's taking this very seriously.
Yeah, okay, really interesting. Nadia, I want to square up something else. You and I have spoken the last couple of weeks about your outlook for oil and the fact that you've pointed out that OECD inventories are not at super high levels yet. So one of the cases, I guess, for oil to be more supported. And yet at the same time, we've published a report recently suggesting that, the amount of floating oil right now is sitting at huge numbers. I mean, like something like 1 billion barrels a day are already on the water, which is just a huge amount. And I wonder whether you yourself have revised your outlook for oil based on the amount of floating storage there is.
Well, there's a difference between what is floating storage and what is on the water. And part of this is, we have U.S. refining maintenance going on right now, which means that we are seeing higher exports out of the U.S. We are finally getting all these pent-back barrels that were supposed to be coming from OPEC+, and we have renewed appetites, as we're seeing, for Brazilian crude coming right now because of these sanctions. So part of this, I would say, is normal because we haven't had that much in the way of crude flows. And when you look at the tanker market, it was at an absolute low in December going into the Trump election. Now we see this crude coming out. The question is it going to be put into floating storage? We've had congestion in Chinese ports, partly because of sanctions, particularly on the Rizal port in China by the U.S. Treasury. And that has slowed things down, but I still wouldn't define that as floating storage. So there's a lot of oil coming for delivery into China, probably going into strategic storage, as we've discussed before. But we don't have the product exports coming out of China that is suggesting that all of that crude is going to be refined and then sent out in the way of products to the rest of the world. I wouldn't put it yet at floating storage, except for these Russian barrels, which may really struggle to deliver. So those may be going into floating storage. Iranian oil could be going into floating storage. And then that's the shadow economy.
Yeah, okay. Really interesting nuance there on how we should be defining floating storage. Nadia Martin Wiggen, Director at Svelland Capital, thank you so much for joining our show. Well, coming up, Ivory Coast heads to the polls tomorrow. We'll get you the latest next. This is Bloomberg. Voters in Ivory Coast head to the polls on Saturday, with incumbent President Alassane Ouattara widely expected to secure a fourth term. Several key opposition figures, including former Credit Suisse CEO Tidjane Thiam and ex-President Laurent Gbagbo, have been barred from contesting. Both have called the 83-year-old leader's latest bid unconstitutional, saying they will continue to protest despite a government ban on all election-related demonstrations. For more, we're now joined by our Chief Africa correspondent, Jennifer Zabazaja. Also with us is Control Risks Senior Analyst for Francophone Africa, Beverly Ochieng. Beverly, good to have you with us. The president is looking to run for a fourth term. He has barred his main opposition candidates from running, the likes of Tidjane Thiam, the former president, as well. So a lot of controversy as we head into the election this weekend. What do you see as the key risks into and out of the election, and whether actually the public will see him as a legitimate president should he win?
Well, yeah, the main risk that is emerging is obviously civil unrest. There have been quite a few protests taking place, mostly in southern Côte d'Ivoire, so main villas like Yamoussoukro, Abidjan. It's spread to places like Divo, Gangoa. It doesn't seem to be, mobilized or systemic. It's rather reactionary, particularly given the exclusion of two of the key opponents, that is Gbagbo, the former president, because of a criminal conviction, even though he had been pardoned, and Tidjane Thiam because of his dual citizenship, which he'd only renounced this year. That has led to quite a bit of tension in the political landscape. They have been calling for sustained protests. The government has responded by banning demonstrations and limiting rallies only to the 5 presidential candidates, including Ouattara. Of course, there's a lot that is at stake, including the legitimacy of key institutions. Ouattara argues that the constitutional change that took place in 2020 allows him to seek for a fourth term. And essentially, this means that there is no legal challenge against that fourth term bid. His re-election is likely, given that he is still quite popular, and also because of reconstruction.
And Beverly, you mentioned some of the popularity that we've seen for Ouattara, at least on the international stage. You're sitting in Senegal and Dakar. What are the implications here for West Africa, and in particular for ECOWAS, if we do, in fact, continue to see a fourth term moving forward?
I mean, there's definitely concerns about the democracy in Côte d'Ivoire across the region as well. We have seen contentious fourth-term bids or additional bids by presidential candidates and presidents, leading to, in Guinea, we had the military coup. We've had issues around the legitimacy of institutions leading to military takeovers. But Côte d'Ivoire has emerged, especially after the civil war and the contestation in previous elections, as an oasis of stability, not just political, but mostly commercial stability. So a lot of people are staking the continued stability in the country to increasing investments, ensuring that there's business continuity and opportunities for people. Within Côte d'Ivoire, and you've seen that youth movements in different parts of the continent, in Senegal before the elections, in Madagascar, which led to the coup, young people do want to have opportunities, and they're hoping that these investments, by whatever government comes in, likely Ouattara's, will be able to provide them with socioeconomic opportunities, which then reduces the likelihood of unrest. And Côte d'Ivoire remaining an economic anchor means that the West African Monetary Union continues to ensure some financial stability and monetary value.
Do we continue then to see stability and investment? I mean, Ivory Coast is one of those countries that many investors say they've been pouring money into. Do you think that continues? Does this election really make any difference, I guess, in your mind, Beverly?
Well, essentially, people are looking out for the outcome. They are preparing contingencies as would be best practices, making sure that their personnel is safe, making sure that they're still able to operate, making sure that they still have equipment, they're able to move around. The election is a single event. Of course, African elections tend to be seen with a higher risk level. In our own outlook, for instance, Cote d'Ivoire continues to be a place of sustainable governance. It has improved over the years. Corruption has reduced significantly, even though it's still a concern. In terms of the sectors, mining, cocoa, the expansion in agriculture, oil and gas, that still continues to be a place that people are pivoting to, particularly as they look at the rest of the region as areas where they can diversify their entry. We've seen uncertainty from changes to regulation, but the Ivorian business community, both foreign as well as local, sees that their engagement with the government continues to be positive. So they are hoping that this election does pass off in a way that ensures business continuity, stability, and therefore economic opportunities for people in the country to reduce the possibility of future unrest.
Yeah. Well, Beverly, I want to go back to what you said right at the beginning of this interview, which is one of the main risks is civil unrest. How far could that go, assuming President Ouattara does actually win the elections and there is civil unrest? Could there be a serious challenge to his seat?
So on one end, opposition candidates have stopped short of calling for what might lead to violent unrest in the country because they are concerned about being pursued with criminal convictions. I'm assuming that Thiam, for instance, is probably looking to even vying in 2030, so maintaining his legitimacy despite his sustained calls for protests and for the country to really re-examine whether they want Ouattara to be president. But looking into the coming days, there will still be some pockets of unrest over the period of the election as people wait for the results, as we wait for the inauguration to take place. This will still remain localized. There's no deliberate mobilization within the country that suggests that there will be larger civil unrest or that there will be large-scale mobilization that might lead to political instability. There'll be reactionary issues over the elections. It's a politically sensitive period. So by the time we get to inauguration and maybe the first-year outlook is the government concentrating on ensuring that they still reach out to the political class for stability, for talks, for reconciliation, and for there to be a sustainable way of cooperating so that those risks do not keep on surfacing, particularly at a point where there are pressures to be able to achieve socioeconomic gains.
Beverly Ochieng, a senior analyst from Francophone Africa Controllers, thank you so much. And Jen, thank you also for participating. Jennifer Zabazaja, our chief Africa correspondent. Now, coming up, Rwanda has been positioning itself as a digital hub in Africa. The nation's information and communication minister says the country is targeting AI to contribute 5% to its GDP growth over the next a few years. That conversation is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. 2 years after becoming the first African country to implement a national AI policy, Rwanda expects artificial intelligence to contribute 5% to GDP growth over the next few years. The country's ICT and innovation minister spoke to Ndiro Ganga on the sidelines of the Mobile World Congress in Kigali about tech investments and the country's AI ambitions.
We've had partners like the World Bank that have been supportive in putting in place, the fiber optic network that is connecting all parts of the country. We've seen deals like Zipline that has come to invest in Rwanda, and what they're doing is really more of a use case. How do you apply technology to solving for a problem in healthcare? 2 years ago, we were able to unlock a deal with Starlink, where for most of the remote parts of the country, schools and hospitals that lack some form of connectivity, it becomes the best option. And through the proof of concept that we're able to do with Starlink, we've been able to bring down the price by 70%. And so that speaks also to the conversation of affordability that we're having today. Just this year, as we talk about AI, we signed a deal with the Gates Foundation for an AI scaling hub, $7.5 million. They started with Rwanda. They're doing something similar in Senegal, Nigeria. And so this already is a show of the investor confidence that we're seeing in our market. We're already talking with many other providers, and that will be announced in the near future on data centers. But also, I think, beyond just looking at the foreign private investors, it's also the local ecosystem, feeling empowered to support some of the ambitions that we have. And we're starting to see our startup ecosystem really rising up to the task and, playing a part in shaping our digital future.
That's Paula Ingabire, Rwanda's ICT and Innovation Minister, speaking to Bloomberg's Ondiro Aganga. Now, for a look at some of the other stories we're following, Saudi Arabia is expanding its influence in tennis by funding a new top-tier men's tournament set to debut on the ATP Tour as early as 2028. The event will be the 10th Masters 1000 tournament on the schedule and will rank just below the 4 Grand Slams. The ATP chairman says they went through a 2-year consultation process with respective player councils on the new tournament. Bloomberg has learned that Saudi Arabia is pivoting away from its $500 billion plan for the Neom City project and is instead preparing to pour billions into areas like AI, gaming, and high-tech manufacturing. The government is reviewing some of Neom's goals against the country's other top priorities. That says oil prices are forecast to stay lower for longer, and new contracts for Neom have been drying up. Well, speaking of Saudi Arabia, next week we will bring you Horizons Live from the 9th annual FII conference in Riyadh, and I am sitting down with some great guests starting Monday. Watch out for my conversations with Saudi Investment Minister Khalid Al-Faleh, Economy Minister Faisal Al-Brahim, plus bank CEOs including Barclays CS Venkakrishnan, Standard Chartered's Bill Winters, and Goldman Sachs David Solomon, and so many more. It's going to be busy for us. And do not forget that the clocks change in the UK over the weekend. So next week, Horizons will be live from 4 a.m. in London. That's still 8 a.m. across the Emirates, midday in Hong Kong, and midnight in New York. So set your calendars, everybody. It is going to be quite the week next week at the FII. I'm really looking forward to it. That was our show. This is Bloomberg.